Welcome to On the Chain. This is Chip with co-host Jeff. How you doing tonight, Jeff?
Going on? Great to see you.
Well, again, we've got an amazing guest tonight. We have none other than Jimmy Valle, and we are going to have a phenomenal show. I want to hear the questions from all of you. You ready to go, Jeff?
Ready to go.
Let's go.
Kick this thing off.
Welcome to On the Chain.
Welcome to On the Chain. So first off, what I'd like to do is I'd like to set up the guest. I'd like you guys to know how accomplished this gentleman, Jimmy Valle, is. I think it's really important to know who he is, what he's done, and we're going to have a great conversation tonight. So before Jimmy founded Valhil Capital, he had more than 2 decades as a partner in 3 AmLaw, American Law 100 firms. These are the biggest law firms in the country. He was basically doing advising public and private companies, MLPs, which are master limited partnerships, investment banking firms, sovereign wealth, and private equity funds, and more than $100 billion worth of M&A transactions and security offerings, including OGE Energy Corp and its $11 billion midstream merger with CenterPoint Energy. Then there was Continental Airlines and its $8.5 billion all-stock public-to-public merger of equals with United Airlines. And then Micron Technologies, $5.2 billion NAND Flash joint venture with Intel. These are big deals. And Jimmy holds a Bachelor of Sciences, summa cum laude with Lamar University, a Juris Doctorate, Texas Tech University School of Law, and an associate. He also has an audio engineering Full Sail. He went to Full Sail up here in Orlando, in our part of the woods over here, Jeff. And he's the former chairman of St. Francis Episcopal School in Houston, board treasurer, Academy of Finance, SBI SD in Houston. Presently serves on the board of directors at several Valhil portfolio companies, including Nevawexwen, Global Commodities, Astrolight Media, and Deltawave Energy. And before no further ado here, as we set the man up, let's all welcome Jimmy Valle. Jimmy, welcome to On the Chain.
Hey guys, good to see you. Thanks for having me.
Yeah, great to have you, man. And I'm guessing you are at Valhil headquarters, since that's what your placard says.
That is correct. This is the conference room area here.
Nice office.
Thank you. Appreciate
Very
that.
nice office. Well, thank you for joining us. I'm really thrilled you guys are here to, that we can have everybody in the chat. There'll be some questions, and then Jeff and I have a couple questions for you. But Jeff, you want to kick this off?
Yeah, just as we get started, my dog starts barking. So
what happens, Jeff? This
background. I was trying to do the drum roll, and he ran to the door.
It's live TV,
There he is. I don't know if you guys. So there's obviously a ton of questions. There's a lot to cover here. But here's the first question that we put in the in our list here. The number one question that people have. Chip, we're starting with the number one. It should go like top 10. We should, but anyway, the number one question that people have is, why would the Fed pay thousands of dollars later when XRP is under $1 now? And I think that's an interesting place to start, because it puts us like right into the conversation.
Yep. Well, it's an excellent question. And you got to kind of unpack the whole deal, what was behind, making a proposal to the Fed at that time. I'll try to encapsulate that quickly. When the lawsuit was filed and Chairman Clayton left the next day, there was immediate, kind of red flags. What's going on here? It was super weird. You had a lot of other, the enforcement attorneys were leaving, and the disclosures we started to have over that first part of 2021 really they were looking curious to someone like myself, who had practiced securities law, was observing this lawsuit, thought that the case, we had precedent preceding the case that said XRP was not a security. So the whole thing seemed super weird. And as the SEC continued to kind of engage in delay tactics, we became very concerned that we would not be able to get justice out of the court system. Okay, and so it's when you start to think about it from that perspective, we became very concerned that ultimately the federal government would try to nationalize or take the XRP or take control of the XRP ledger in some manner. So we wanted to have a valuation of XRP on the record in case something like that occurred in the future. So we initially came up with terms. It's basically, I don't know if you guys have had an opportunity to read the term sheet, but it's set up in the structure just like a public to public M&A transaction is set up, where instead of having a transfer agent in our transaction, we have a liquidating agent. Okay, that was going to be one of the big banks, a big trust company, maybe PolySign, Standard Chartered, JP Morgan, someone like that would stand in. And what happens in a public merger deal is once the deal's announced, the transfer agent then takes in the securities, and when they receive it, it's converted in the merger into the right to receive the consideration in the transaction, right? So we had the liquidating agent basically sitting in the same function of as the XRP for the people that wanted to tender into the deal. To the extent they would turn it in, that would become the right to receive the consideration. It was around that time, I'd say we worked on it, the terms, for a couple of weeks, and we knew that it didn't really matter what anybody at Valhil had to say about the value or what the consideration should be. We saw ourselves standing in the shoes of a reasonably prudent XRP token holder. So we basically formed, we basically formed a special committee. Not unlike if you were in a public company, you would go to your board, maybe some of the people in the board are interested in the transaction. You have to form some subset of the board. We call that a special committee. So what we formed is a confidential committee of about 20 professionals. These were lawyers. We have a forensic accountant. We had James Rule was on there, but we had a bunch of different people representing a bunch of different backgrounds, all professional people, but all also XRP token holders. And we basically went through a valuation process with them. We vetted the terms with them and ended up making a lot of changes. There were there were things we had. The biggest change we made was our approach. We wanted to do this in a public bear hug type process. And for those of your listeners aren't familiar with a bear hug, it's kind of what Elon Musk did to Twitter, right? He kind of brought it back. This used to happen in the 80s and the takeover wave all the time, that a person would make an offer. They would call the CEO of the company, the target company, and say, we think we should buy your company for X dollars per share. And effectively, once they got off the phone, once the person say, screw you, I'm not selling or whatever, they would then release a letter that was effectively to the management and let the world know that they'd made this offer. So the matter is then kind of tried in the court of public opinion about whether the deal should happen or not. And that was the approach we wanted to take initially. There were members of the confidential committee that thought that would be not prudent, that it would create unreasonable stress in a deal that might be able to get done privately. So we ultimately we agreed to take the path that the members of the confidential committee suggested. The value, there's a lot in the value. First of all, there's 4 elements of consideration in the proposed transaction. Only one of them is kind of a price per token. There's also there's these the ability to retain your airdrop rights, and we called it an airdrop residual right, which we would basically fork somehow the XRPL into those rights would be retokenized into another type of a token that those tendering shareholder or token holders would get to keep. There was a debt forgiveness for the participants, kind of all debt, and there was a tax holiday that applied to each token holder and their descendants. The reason we did that, those elements of the consideration, is because we viewed the federal government in being in the situation that has since that time. We initially proposed the transaction in September of 2021. We had a follow-up in October, late October. But at that time, we already were convinced that the world was going to look like what it looks today, and that it was going to start breaking down into currency blocks. There was going to be a push to go back to some type of a gold standard, which to us is a euphemism for just an asset-backed currency system. And that the people who had made that possible by not only having the foresight to invest in this technology before, the people had done the homework, done the research, figured it out, and had made the investment. But in addition, at this time, they had held for 9 months while, having basically a lawsuit filed against them by the federal government. So you had kind of, the movie Shawshank Redemption, where he crawls through the tunnel and the filth and all that stuff. And, Morgan Freeman says, I can't even imagine the stuff that these people had the stuff he went through to get out the other side and be free. We view the people who have lived through this as going through a very similar type of crucible process, and they should be compensated for that. So that's what really those elements were about. The price, we had a lot of information about, we had information that there were deals that were being done off ledger that were far in excess of what the market value is, okay? Number one. Number two, we had information that, sorry, lost my train of thought there. There was a limit, there was less actual retail holders of XRP than we are led to believe by the market cap and the float in XRP. So we believe at that time, and we believe it might be less now, that only somewhere between 0.5% and 2% of the whole 100 billion is actually held by retail, and that the vast majority is already held by central banks, large commercial banks, hedge funds, very large financial institutions that are preparing to use it after whatever is supposed to occurs, the event. So it wasn't, people were very quick to say, oh, the 37.5 or 25,000 times, 48 billion, that's like this eye-popping. It is eye-popping, even at 2 billion, it's quite eye-popping. But we didn't think that was that's what the transaction would be. We thought the transaction was going to be somewhere in the neighborhood of no more than about $50 trillion, which will be the largest M&A transaction ever to occur in the history of the world that we're aware of, but wasn't as extensive as people were saying.
Yeah. Do you
The
think,
reason? Yeah,
just a quick
go ahead.
question there, sorry. Do you think that, people are, overly focused on this notion of a market cap when it comes to these digital assets? Because how often are people discussing, the market cap of, of gold or, a precious stones, gemstones, diamonds? If you have whatever, we don't, has anyone done an accounting of all the diamonds in the world and all the diamonds that are still in the ground and say, hey, this is an overvalued asset, and yet people are still paying a fortune for diamonds but let's look at the market cap of diamonds, and if that's not done, and people are, so what do you think about that, as this argument that people keep putting on the table? Oh, that XRP or some of these other assets can't go to X price because of market cap.
I appreciate the argument in that it is one weight on the value kind of going up. There is this kind of you would have to move through some type of inertia that exists in the market to get up to those values, but that's about it. There's a couple of things I don't think, and you're really hitting it, Jeff. We don't really appreciate what all the money is. For example, when we were working on that, we were kind of working off values that all the money was somewhere around 3.75 quadrillion or 4 quadrillion. That's everything. Assets, derivatives, stock, real estate, everything, precious metals. We have since come across publicly filed liens. There's a lien out there that exists that's from the North American Water and Power Alliance that's at 14.3 quadrillion. So there is more debt in the system than we can possibly imagine. So I mean, and then there's all the additional fiat money that's been pumped into the system since COVID. I believe in 2020 and 2021, it's like 65% of all money was printed and put into circulation. Extrapolate that across every country in the world. We think that all the money is a stratospheric number that's almost unquantifiable. So I understand people thinking that those values that we proposed are unrealistic, eye-popping. We thought they were very fair, and we were trying to provide a mechanism for our financial leadership and our political class to come to the table and in a very open forum strike a deal to deal with their problem, which is an excess debt problem. And so it was really an attempt to kind of, let's get the adults in a room and let's work through this and see if we can get it done.
Very good. Before we get started even further here, I wanted to be a big shout out to James Rule XRP, and James Rule was instrumental in making this happen. One of the most top-notch, not only streamers, but just human beings on earth. And James, thank you for that XRP tip to get the show started. James, thanks for that. And I want to do a big shout out when we first got in here. Also to Mark Phillips, also give a big shout out to Wald Gardner. There it is right there. And Wald Gardner, so happens that Mark Phillips was the first one that got him interested in XRP. So you see this community that we have, Jimmy. It's this massive community, and through almost everything that we do together, sometimes we get along well, just like a family. It's like, we get along great, and there's a lot of bickering and stuff, and that happens in Twitter and other social platforms. But I think the one that ties us all together is this asset XRP and why we were interested in it. We may have all invested for different reasons, but Jeff and I are very, very big on the whole ecosystem. We're not maxis when it comes to XRP. We just happen to think it's one of the strongest digital assets out there. And go ahead, Jeff. You want to throw that question up there again?
Yeah, I want to give a quick shout out to Jason, new member here with OTC. And then we've got here Jim D. How many politicians would 1,000 XRP buy? That's the important question if we start getting to those types of price points. Just want to go through, give a quick shout out here to S. Henderson as well. Want to say thanks to Jimmy and Valhil Capital for putting the true value out there before our government tries to protect us from our investment.
That is so well said.
Well said. Well said.
Protect us from our investment, which is just, it's kind of crazy. So also too, so the government itself too, you see the government creating, wouldn't they just create their own FedCoin? I mean, I guess the CBDC is their version of it.
Yeah, no, we think the government is going to create its own digital currency. The question is going to be, is it an asset-backed digital currency, or is it another fiat digital currency? I think their plan now, the Fed's plan is to issue a fiat digital currency. And I think, regardless of what Valhil has done, the BRICS coalition right now is going to make that near impossible. As the days continue to pass, and we see more and more countries, swinging over to be part of that coalition. Saudi Arabia is seriously considering. If Saudi Arabia goes to the BRICS coalition, the dollar as we have known it is dead. It does not exist. People need to understand there is no intrinsic value to a dollar. It's a piece of paper. It's worth about 2 cents intrinsically. So I think what's going to happen is that the cooler heads, the adults in the room, will win the day, and we're going to have to go back to an asset-backed currency. And I do think it will be digital. And I think that they're going to slot XRP right there in the middle. And that's going to allow all these different, the way we kind of see it breaking down here is there's probably going to be these currency zones. And, it's South Africa is already part of BRICS. But other African countries, especially Uganda now, they've just had this $13 trillion gold discovery there. And their president is saying he does not want that value, squandered and going outside. He wants it to be used for his people. And I commend him for that. That is the type of thing you could have an asset digital currency supported by. And you could see a coalition in Africa developing. And the West is going to have to, we're going to have to get with the program. And if we're going to participate in global trade, we're going to have to stabilize our currencies as well and our political class. And it's going to have to be some type of a gold standard. As Judy Shelton would say, it's going to have to be a gold standard in a cryptocurrency kind of way.
She's so right about that. Someone asked her on Twitter, she felt the same way. And she's like, of course I do. And that's the whole thing is that, can you imagine how easy it was to detract the entire U.S. population when Nixon comes out and says, well, we have gold speculators and don't worry, temporarily, we're going to have to not back the USD. We're going to turn it into a petrodollar. And don't worry, it's temporary 50 years on. Yeah. So I do think that, I don't think that sort of that magic that happened back then is as doable today, especially with the massive inflation we had. We saw it in the 70s and it's compounded, but we seem to manipulate that with numbers over the years to try to make up for it. Two people had to, a family had, a mom and a dad going back to work. And so all of this complication, where do you see us going as far as the digital age, the fiats sort of, I don't know if they ever go away and die, but let's say they get weakened. We saw the euro is like worth $1.02 right now. It's probably going to go under $1, very weak, which makes U.S. goods unimaginable, very expensive to now purchase over in Europe, which crushes the economy. But where do you see us going in the next 3 to 5 years as far as the digital assets continue to evolve and Flare coming online and some other technology like that?
Mm-hmm. So I guess there's going to be two major things that occur. The first is going to be these currency zones adopting effectively central bank digital currencies, but asset backed. That in and of itself is going to cause some shakeout among the parties that actually have the assets. They've got the gold, they've got the natural resources, oil and gas, and the parties that do not. So that's going to be a bumpy ride to ride through. The other thing, though, is this technology is going to change everything. And what I mean by that is the tokenization of all assets. We just had, the spring of last year, really through the first part of this year, we had the NFT craze, and everyone rushing out the athletes, Tom Brady and Gronkowski and all these guys doing these NFTs, which are effectively baseball cards, right, on a digital format. One of the things that we know from a deal we did last year actually, is that NFTs are a lot more powerful than just basically having digital ownership transferred with intellectual property, art, music, those types of things. There's a value for that. There's a value for transferring other types of intellectual property rights in that manner. But what really is going to be amazing, and I think when you hear the Brad Garlinghouses of the world talk about what's really coming with NFTs, what's coming with NFTs on the XRPL, is the concept of economic rights being embodied in a smart contract, and that security, right? Because that will be a security potentially, depending on how it's done. Those rights of moving value in a smart contract will be tokenized and be able to be transferred. All things that are done right now, but by paper, as far as, anti-money laundering, know your customer, all this infrastructure, this regulatory infrastructure is going to change with this tokenization process. You won't need, because it will all be embodied and published to a blockchain, an immutable blockchain that can't be hacked. You won't need this redundancy of banking systems and regulators and all these middlemen with their hands out trying to make fees to make the world move around. All that can kind of be eliminated, and frankly, that's what freaks them out, right? Is that they see this coming better than we do. They've already had the impact to their business and fees. All the major banks are coming out and basically cutting fees, and they're setting up for other things that aren't as consumer friendly as that. It's probably beyond the scope of this conversation, but that tokenization of all assets, the tokenization of oil and gas, precious metals. We have this vision. In fact, it's the thesis behind one of our portfolio businesses, Deltawave Energy, is that imagine as hydrocarbons are flowing through the system, that the value is going out in real time to the constituent parties. So the taxing authorities are getting paid, the royalty owners are getting their royalty, the people who aren't operators, who are just passive investors, the securities holders in these public companies. Imagine you're not getting, even if you get a dividend once a quarter or something from Exxon, imagine getting it in real time as the hydrocarbons are actually hitting the meters and that type of a thing. So that's the world we see, this purely liquid, crazy fast micropayment transactional world. Probably won't be the next 3 years that we get there. In 15, 100%, I think we're there.
Yeah, there's so many. It's amazing, as we see the shift that we're going through right now, and we're feeling a lot of the pain of it. Some of it being forced on us. They're not allowing the natural progression. There's different sides battling for supremacy and to maintain their power hold. And it's interesting, you bring that up with the financial institutions and those that run it, because they do see the writing on the wall. They have been pushing back as much as they possibly can. They currently are able to control most of the political outcome, mainly because of the lobbyists. But that shift of power is changing drastically. And, it's all the people here listening right now, and watching, what's unfolding, that are, really, bearing witness at the early stages, but you're kind of in a unique position, as you start looking at the, investment opportunities, and, so, it's interesting, there's so many things going on right now, both economically and politically. When we see even what's going on with Elon Musk, and, the battle of how they're singling out the government, and the government coming after them. Yet, he's got one of the biggest contracts, to put rockets up into space and on the moon. So individuals are having a big play. So 15 years unfolding, but what's your, projection just in the near future? What do you see kind of transpiring, what are some of the power plays maybe we should expect from the government, and what should we expect from the crypto community?
So what the governments have done in conjunction with the central banks and the large commercial banks is coming out of the last financial crisis when we had the bailouts, right? They actually took they took taxpayer money and then went and infused it to the banks, and then we all watched these banking executives get these massive bonuses and everything, and Jamie Dimon's coming out saying, well, we got to keep our talent. That infuriated people, right? And obviously, as part of that financial crisis, we had the Fed shift into overdrive with this quantitative easing thing and never took the foot off the gas pedal. In fact, they seem to find the turbo boost and the rocket fuel and all that stuff and just keep going. What they've done under the cover of darkness is they've legalized basically the opposite, which is a concept called a bail-in. And so as liquidity is drying up, which it is clearly drying up right now, that's what's so scary, is we're seeing people we believe to be extremely wealthy, and these large institutions are freezing up. They're running out of liquidity. What is legal is to basically go in the banking case and to grab the deposits and just take them in, and they can give the customer, the depositor, they can give them shares in the bank and say, well, here you go, there's consideration for taking your deposits. So we think that is what is coming very rapidly. It's happened. I think it may have been the UK. Commonwealth Bank has just done it. Well, Australia, there was an Australian bank that last week said the bank is insolvent. Come get all your money, and going into a weekend, and basically said, if you don't have it out on Tuesday, we're taking it. So we're going to see more and more of this bail-in stuff. Obviously, that is going to cause people who are not aware. Pretty much everyone watching this podcast tonight is aware that something's going on. They're investing in digital assets. They're aware that there's these massive shifts and massive changes occurring in the economy. Most people, however, are completely oblivious to this. They're more concerned about what's on Netflix. What am I doing this July 4th weekend? Those types of things, which is a natural thing to do, but they're not wired to think this way, right? So this is going to be a complete shock. When one day they go to Bank of America, not that Bank of America this is going to happen to them, but it'll be these very large institutions that we have all this trust in, and they just pop in a day, and then their remedy is to take your deposits, which you think is your money, but if you read your banking agreement, the small print, it's not your money. So
don't worry, Jimmy.
Some process like that starting to happen, and it'll be the outrage of that, I think, that registers with the political class, and then we've got to move into this digital, asset-backed digital currency thing.
Yeah, I wouldn't worry, Jimmy. Don't worry. We have FDIC because that could never fail either. I'm sure that's incredibly worth it. We have insurance with the government's going to back up to $250,000 on a bank failure. And Jeff had mentioned this the other night. He's like, has anybody ever really taken him to task on that? Does anybody know if this FDIC is really? I mean, what happens when the government's insolvent? So who's going to back it up? And if you're looking for, people talk about Bitcoin being a store of value, but let's be honest. If you're going to put it into something, where do you want it? Do you want it sitting in a bank, fiat, that's losing money every single minute of the day? Do you want to take it a chance? And even people down in crypto right now, people that have been around a while, 3, 5, 6, 7 years, this isn't even as bad as some of the other dips. People are freaking out, but a lot of it's driven by what people hear on TV. And, the banks are coming at it hard. You can tell the central bankers are uncomfortable because they're fighting it so hard, that they're going at it so hard. I wanted to throw this up here and get your thoughts on this. This was in relation to a tweet that John Deaton put up, and he said, so what happens to XRP holders if XRP is declared a security and has to be registered with the SEC? It looks like nobody's explaining that part. John Deaton weighed in and said, well, most likely the status quo would remain in effect during an appeal. A buyback could be arranged for those in the US. And I know the SEC offered a buyback of the Valle token, but I don't know the specifics. It's up in the air, to be honest. I wanted to get your thoughts on that.
Yeah, couple of things. This is something we've thought a lot about, and first of all, the transactions that Ripple is being sued for. So the issuances, to use SEC speak and securities language, the issuances by Ripple of XRP and the sales of by Chris Larson and Brad Garlinghouse, if those were a security, they were only sold to institutions. Okay, so we're talking in the legal speak here, it's an accredited investor, someone who's worth over $1 million, whatever it is now. There's a multi-pronged test for that. So you could have people, it'll be your people like Grayscale, Galaxy Digital, Valhil would probably do something like this, but we would raise a fund, and take investments from accredited investors, and we could deal in it, right? So the banks could deal in it. The banks could be pushing XRP back and forth, no problem, because they're accredited. But it would all be basically exempt from the registration requirements because it would be private placements. They wouldn't be quote unquote public offerings, right? So that's one thing you could see happening. Initially, as the shock of that ruling, I think, would occur, is you'd see a lot of service providers, aka middlemen, trying to make markets in these securities. No different from the way securities are traded this very day. The buyback concept. So what the underlying premise to where this could head to a buyback is that effectively the government will be taking, especially from the non-accredited investor, your ordinary retail investors who don't meet the accredited test, the government would effectively be taking that XRP from them, certainly taking the rights to make use of their own property, and they'd be taking it without due process of law. That's a violation of the Constitution. So they'd have to pay fair value for it. What is fair value? Well, that's what a willing buyer and a willing seller would trade on, both knowing all the facts and the seller not being under any compulsion to transact. Okay. So, there's got to be some full disclosure from the government. Yeah, we're actually going to use this as the plumbing of the global financial system type of a disclosure. It's going to be, the price is going to be set globally at $100,000, $125,000 a token. And that's the way we're going to use it. And so we need to pay you, since you won't be able to use it because it's a security, right? We got to pay you kind of the fair value. No different if I was building a road and I took out your front yard, and I was building this road and I needed to compensate you for taking the road. We'd have to have some valuation done and then figure out how much of the property that the government took, and you'd have to be paid fair value for that. Happens every day. And that's really what's underlying the proposal. We wanted to start setting out what is that fair market value if the XRPL and XRP actually achieves its ultimate intended use case of moving all value across the ledger.
Incredible. So I have it pulled up right here. And so this was FedExed out to basically the Federal Reserve of Boston, New York, Philly, Cleveland, Richland, basically all of them, and in care of the Board of Governors of the Federal Reserve System, Mariner Eccles Federal Building in Washington, D.C. Now, did you ever hear back And was there any mention at all of this? We received it. Any official?
So
It's
we did confirm. We had I guess you could call it a telephone campaign where several people who were interested, I'd call them just proponents of the deal, started calling these different district banks to see if they had received it. And we did have a confirmation out of a couple of them. At first, they were like, what are you talking about? But we did have confirmation that they received it. The Fed has never contacted us. We did have one of those people that worked at the Fed said they would be completely open to engaging with Valhil and talking about it. And their name and contact information was passed on, and we attempted to get in contact with them and discuss it, and never had a response. Now, we didn't really expect to get a response, right? That wasn't really the point. The point was to start establishing in the marketplace what the true fair market value was and what an objective party, a reasonably prudent XRP token holder, would take in order to be divested of their XRP, and they'd be happy about it, right? That being said, so much time has passed now, things are different. The Fed has been tucked under the Treasury now. That was something that happened under the Trump administration. The Treasury may be the correct party. We may be going back to, constitutional money, kind of the Republic has, the Congress has the right to coin money and set the value thereof. We may be going back to, and the Treasury would be the appropriate party that would control that, and they should have the majority of the XRP. The other people that we engaged with, and we did have numerous conversations with, were a few of the very large commercial banks, notably JP Morgan. We had several conversations with bankers at JP Morgan, and they really kind of they started out like, this is completely ridiculous. Why would anybody do this? And by the third conversation, I think they started to appreciate what the fees would be if they were actually the liquidating agent, and started to have all that money. Because look, the other thing, the consideration for the price per token is not in dollars. It was in electronic SDRs. So we turned our XRP in, but we didn't want your fiat money. We wanted that asset-backed money that's going to come out of the IMF. Now, what's an average person in America or UK or France going to do with an ESDR, which is really for central banks to engage with each other? So nothing. So we would have to basically allow some participant in that market, like a JP Morgan, to hold all of our ESDRs, and we would just basically, it'd be like you're a trust fund baby or something, and you got to call up, the trustee and say, I'm going to go buy a car, I need $100,000, or I'm going to go get a mansion for the kids, and I need $3 million or whatever. It would be that type of a relationship. That's the opportunity. So JP Morgan, if you're listening, that was the opportunity. And also to reestablish trust among all of your customers, that you were the institution that actually went out there and worked with the Fed or the Treasury to get this massive deal done for everyone's benefit and stabilize the global economy. And because of that, they would have all this goodwill and loyalty and fees in connection with serving in that capacity. But alas, they haven't gotten there yet.
Do you think that that's even a reality? That the people, that government in general would really, even though we've seen what the U.S. government's done with the Fed, but to an extent, there's still sovereign control over money. Do you think governments are going to relinquish their full sovereign control over money?
Well, this was trying to put the government in a situation, and a lot to discuss about this, right? Because I think a lot of people don't understand that the Federal Reserve is not actually federal and doesn't have reserves, right? It's a private corporation that is allowed to print money. It's basically the republic constitutional money function that Congress has in the Constitution was outsourced to a third party.
Yep.
And that third party was given. We were actually putting the asset in the hands of the sovereign, or at least the sovereign's agent. Okay. So that it wasn't we were taking control of the money. It was actually quite the opposite. We were giving it back to them in order for them to be able to use it at the big kid level.
Right. So here's kind of a follow-up to that. And this kind of gets into this notion of CBDCs, and Chip had brought it up early on. We have XRP, we have all these digital assets. Why would governments go to XRP when they can just create their own CBDCs? And Doug has brought up, actually, he's been kind of on point as you've been bringing up your points. He's been making some points here, but CBDCs, he's saying, can't be deemed legal tender in respect to the U.S. Constitution. Do we have an issue, constitutional, issue with a digital dollar, with a central bank digital currency that the Fed is saying that they're currently investigating? And there's been resistance and some pushback there. Where does that all fall into play? So why wouldn't governments just create a CBDC and forget about everything else and tell all the private industry, hey, forget it, we found our own solution and we're moving on?
Yep. So excellent question. And with respect to Doug's question, with all due respect, I don't know that I concur with Doug. I would love to have a chat with him about it and see what's kind of behind him saying that. In the Constitution, Congress has the right, it's directly expressed in there, to coin money and set the value thereof. So certainly Congress, I believe, could come up with a digital currency. And then determine how that's going to be managed if it goes back out to a third party like the Fed. I guess they could do that, but I fully believe that countries are going to create their own CBDCs, but what that is like its own network, right? So there'll be a FedCoin network, or there's talk that USDC will become potentially the replacement, the digital replacement of the dollar. Whatever it is, it's existing on its own network and has to communicate in international trade for the things that the government wants to buy internationally, whether that be goods and services out of China, whether that be weapons, whether that be precious metals, whether that be energy, right? Whether they want to buy oil and natural gas from wherever, from the Middle East. The Middle East would have their own digital currency. That's their own network. Okay, so what XRP is a bridge to those two networks. It's interoperable. It's the base layer protocol for both of those two different networks to report to, transmit the value. And so you don't actually have to send, like right now today, these fiat currencies are really just networks, right? They're networks of money, and the US has got theirs, and China's got the yuan, and Russians got the ruble, on and on and on, right? They aren't interoperable. Because of the petrodollar and because the US dollar through the Bretton Woods agreement was declared the world reserve currency, they keep holdings of dollars. They have nostro vostro accounts, these types of things. So it makes it easy for them to transact in dollars, but they can't actually take in a dollar and pull out their own currency, right? So in this new world, after the event occurs, all nations are going to still have their own sovereign currencies, we believe. But how do you take that digital sovereign currency and get the other party what they want? Wouldn't it be great if I could actually spend my Russian ruble, which is now gold backed, God bless them, and get and have the guy who wants to get dollars on the receiving end up with dollars? XRP makes that possible. So that's why we see XLM to a certain extent could do the similar type of thing. It's just XRP is further along, further tested, further integrated into the central banking and high-level commercial banking system. It's just going to be it's tested, never been hacked. It's just further ahead, and it's those deals, right? It's that plumbing that's the hard thing to do. Coming up with your own currency is nothing. In fact, we've learned recently that Cargill in Africa, they were having currency issues back in, it was something like the 70s, and Cargill came up with Cargill bucks and started distributing Cargill dollars effectively to all the people that were working, and you could buy out of the Cargill store and get goods and go to the supermarket and be spending the stuff. They had their own little ecosystem in Africa that was all the different people that were working for them, and this went on, and they made a ton of money basically putting that currency system in place. It's no different now. So it's the interoperability, it's that base layer protocol, just like the internet has, right? The standardization of that base layer protocol that makes the whole thing work and is going to resolve what's a huge issue, which is the Triffin dilemma, right? So a lot of people aren't aware that there is a natural, conflict between using a national currency as the world reserve currency. And if you think about it logically, it's pretty simple, because as you pursue your legitimate international interest, your international geopolitical interest, you end up inadvertently hurting the people of your own country, because you're basically getting overextended, you're sanctioning, you're using your system to sanction other parties who can't participate, so they can't get cheaper goods and services back in to your constituents. And the opposite is true as well. If you just focus on your citizens, on your constituents, you end up sacrificing the progress you've made in the geopolitical landscape. So really the ideal, that's called the Triffin dilemma. The ideal thing to occur is that each country has a uber strong asset-backed currency based on the actual assets and resources they have in place in their countries, and the human potential, the human capital potential they have in their countries, and that they just use that money to engage in international trade by going through a bridge asset like XRP. You solve the Triffin dilemma, everybody raises up, humanity should rise because everything gets better, and that's hopefully 50 years from now, that's the world we're living in.
Interesting. So I wanted to go ahead, Jeff.
I just wanted to throw this one up there. My dog's barking again. But this came earlier on, and so this is, and I'm sure everybody's struggling with this dilemma right now. We're seeing some pushback on some of the exchanges. We saw what happened to Celsius recently, and people are holding their asset, on ledgers, as well as on these exchanges like Uphold, Coinbase, etc. So Counselor Murray's asking, he's been stacking XRP over on Uphold. Should I take it off? And where's a good place to send it? What are your thoughts in this time of potential turmoil? Do people leave it on the exchanges, or should people be self-managing their assets on ledgers? What are your thoughts on that?
So we are very much engaged in the self-managing type thing. We're keeping all of Valhil's, well, let me say, the material portion of Valhil's digital assets and my personal digital assets. 99% of them are kept on cold wallet storage. Uphold, not every exchange is the same, obviously. Coinbase came out about 3 months ago and added new risk factors into their SEC filings. What the risk factor effectively said is we can bail in your assets in the event we go bankrupt. Okay, that's inappropriate. That's unconscionable from where we stand. So we certainly wouldn't hold them there. A lot of people don't appreciate that Coinbase's fiat liquidity arrangement is with JP Morgan. That's what JP Morgan is prepared to do should JP Morgan go bankrupt. So they're just basically putting that policy onto Coinbase, we believe. Uphold is different. First of all, Uphold has continued to make a market in XRP through this whole shit show of the SEC lawsuit, and that in and of itself speaks volumes to us. They just came out, I think, today, and had effectively an advertisement talking about how boring they are, and that they do not do what some of these other exchanges do. The other exchanges are basically involved in fractional lending, just like the regular banks. So they take your deposits of your digital assets and they end up loaning them out and charging interest on those digital assets. And that's the problem. They're taking assets and turning them into debt. Okay. So that creates the risk of failure. Uphold, according to what they said today, they're not engaged in that activity. They don't loan out the assets. If you've got a wallet on Uphold, your assets are really there in your account, and they're not going to loan them out. So they're making money. They have a different business model than a Coinbase and some of these exchanges that are failing. That being said, so I guess to answer his question, I think they're safer on Uphold than probably any other quote unquote exchange. And I feel pretty good about that. But we only put on to Uphold basically what we're going to liquidate to turn it back into fiat, more or less. We keep a very small amount. It's the on ramp and off ramp out of the assets for us, and that's the way we think about it. No different than we think about regular banks. And just who knows when it all goes off.
Exactly. Who knows?
I just look, a lot of this is really my wife and I were talking about this last night. She might be watching actually, but this has been kind of this for all of us, I think, this kind of crucible awakening time of realizing, you can't always just farm out your responsibility to someone else, and pay them a fee and do it. At some point, you gotta be a man, you gotta be a woman, and be responsible for your own assets and your own actions. Okay. And we're just in that time, and that's one of the things that makes crypto and digital assets so hard, I think, to even get involved in the first place, because we're so used to relying on these service providers, these banks, credit unions, all these people who make us feel good because they got this nice user interface and glossy websites and all this stuff, and it just makes you feel good, right? And you got to get over that, even to write down your keys, right? And to go through, I'm talking like when you first get a wallet, and you remember how unbelievably stressful that whole
still
process
the same, Jimmy. Nothing has changed. Okay, nothing has changed. It's
Every
all
time
the
you
same.
plug it in, whenever you update it.
Why are those people on the bank websites so happy? I mean, they're the happiest human beings on earth. I mean, they're just so excited about life, and they're getting a house, and they're doing this, and I mean, they're huge people. Hey, before we get this last question in, everybody that's here tonight, consider like and subscribe to the channel if you want more XRP related content like this, if you want more interviews like this. And again, Jimmy, thank you for coming on. I wanted to get this one last one in here. But David Schwartz has brought up a number of times in tweets that if so chooses, if the validators, if it was put out there as an amendment to burn the escrow, the $50 billion in XRP in the escrow, it certainly could do that, right? If it met that 80% consensus. Now, here's kind of a weird thing. We've heard a lot about that 50 billion where the Fed would love to get their hands on that, right? They would love to have that. Now, what would stop the Fed, or with the risk of the validators basically going out there and saying, put an amendment out, okay, we're going to burn that. I mean, we saw that happen with Stellar. Stellar's like, we're burning the 50 billion, and they burned 50 billion. Now they have a 50 billion total supply. So if the Fed's interested in the XRP, we've heard this, we've heard David Schwartz talk elegantly about that too, that how would they get their hands on it? But again, why wouldn't they be looking at some other digital assets? Why wouldn't they be looking at, let's say, Quant or like XLM or, Algo or any one of these? What are your thoughts about that? Is that something where do you think that could happen someday, where that 50 billion supply could get burnt? Do you think that if the Fed were to say, hey, for some reason, here's the fine for Ripple, and we're gonna let you go. We're gonna say today's XRP, not a security. However, we need that $50 billion and 50 billion XRP, I should say. And then we rush behind the scenes to go burn that. I mean, what are your thoughts?
There's a lot in that question.
There's a whole lot.
I'll do my best. The way we think about it right now is that the Fed could not do that because it's published to the ledger in a cryptographic escrow. So you would have to have the validators agree with the Fed. And we're talking about a decentralized network of nodes spread out all over the world, most of whom don't give a shit what the Fed thinks about wanting the escrow or not. So it is impossible for the Fed by some type of fiat order to make that happen. I don't think it's necessary to burn. People don't realize how limited the number of XRP is right now. Okay, we're talking about numbers in the quadrillions here that have to start settling across this ledger, and there's only 100. In fact, there's less than 100 billion because the price has been so depressed for so long. We've had about 10 million, I think, burned in transaction fees, right? Which are less than a penny, right? But it's a deflation. It's a truly deflationary asset. It's being consumed. You have to get the price up high, right? That's the other variable in the algebra equation. You got to get the price up high so that it works and it's stable to be moving the big value. Burning half of it, it just makes the price variable go up, and it doesn't change, to me, the basic equation. They both have to be equal on both sides. So Stellar did that, different time. I think they were trying to create more marketability for the asset at the time. I don't think it had any demonstrable change on the price. So what has to happen is adoption has to happen. We have to start using this technology in the way it's intended, and we have to start. What that means is bringing value, assets of value, onto the ledger and starting to move them in this 3 to 5 seconds type of thing. The more that occurs, the higher the value is going to be. It's the transactional nature of this, watching the price and all that. It's kind of a red herring, other than we have to go in and out of fiat to deal in the asset right now. So I just think it wouldn't be prudent to burn half, and I think that's anybody who's thinking about this rationally knows it doesn't make a difference. So you're not going to have the 80% even vote on it. It'd be like that's just kind of a silly idea.
Yeah, agreed. But I wanted to throw it out there. I know it's been a lot discussed. Go ahead, Jeff.
That's a lot. But here's I just want to fly through a couple comments and questions here. One was from Rob McDermott. He just said, this goes back to the notion of market cap and everything, what people, were considering. And he said, just remember how crazy it sounded when Google told the world they were going to map every address in the world. This is not too far-fetched. And I was thinking about that again today as I was, driving in the car, had the navigation on it, kept pinging school zones. Like, can you imagine someone's going around, figuring out where every single school zone is? Sam Ross, they were talking other commentary. Just want to give a shout out to Sam. And then we had this from Mentalec. Have any other countries' central banks extended an XRP buyback to citizens of those countries? Do you think that there's so basically question, is there any country out there that has considered, contemplated, or proposed?
Specific to XRP, not that we are aware. We are aware that especially in the Middle East, for about the past 20 years, they have been looking to collateralize another currency system to get out of the petrodollar. This has been a huge objective of leadership in the Middle East. And you're seeing the Qatari National Bank has basically got on RippleNet. The Saudis, the people in Dubai, the UAE are all extremely bullish on digital currencies. So I think they're going to love this. We've actually got I meant to send it to you guys. I don't think I did though. We published an advisory report this past month in June, talking about the transition to asset-backed digital currencies and managing that process. And it's our suggestion. It's an XRPL driven type of a thing where you can take advantage of the new liquidity hub that Ripple's rolling out with. People, you forget that we're going to not only be able to go into all these fiat monies or the asset-backed versions, the CBDCs, but we're also going to be able to go into Bitcoin and Ethereum and all the 20,000 tokens to the extent that all of them survive the next few years. We'll be able to go in and out of all these different types of assets, tokenized securities, the whole thing through the liquidity hub. So
Nice.
yeah, it's coming.
Michael Markets, another great YouTube streamer out there, said, the U.S. government can't even make a website. I concur with that. They really struggle with a lot of things. And if you can't do the bare bones of a website, you're in pretty much when almost anybody can do it these days. You pretty much have to worry about it. Then we have XR Bags, another amazing content creator in the space. 10K, 35K, send it.
Hey, 10K is the end game, Bags. We all know.
Yep.
10K, baby.
To wrap this one up, Jim D. The irony is the new empire of Russia, China, BRICS may force the world to go back to a gold asset-based currency. And you just put that very succinctly, talking about what's going on over in the Middle East right now. And they all see the writing on the wall. And we know that the Middle East isn't going to a digital yuan. They're not going to the ruble. And they're not going to any other controlled currency like that. So get some neutral currencies out there.
Yeah, and
they don't have to. That's right.
Yeah,
there's an app for that.
There's an app for everything these days. Remember, like the app, you can have an app on your phone, and what it'll do stuff. You're like, what is it going to do? I just want to make a phone call. I mean, and it is amazing how far we have come. And we look back at those days and we laugh. Who would be stupid enough to wait in a line when the first iPhone came out for 4 hours? I'm not naming anybody, but some people did it, and it was like a little silly thing. It did nothing. It basically make a phone call and it had a calculator on it, kind of like your other phone that it replaced. So, and we were like, but the screen looks incredible. It looks like a small TV screen, like a small computer screen. But this is the wheels of progress as they turn. And I just want to say, Jeff and I, we are very thankful you came on with us tonight and kind of talked through it with us, and to kind of go through these questions. We could probably do another hour, so we might have to have you back, on another
I've
show.
enjoyed it.
We need one more question here.
Go ahead,
Before we
Jeff. Why
go,
not? We're over
Sir John
time.
brought this up. There's two pieces of art behind you. One
Yeah,
is looks like it's in the glass behind you,
Yeah.
or is it? It's either glass or on the wall. It looks more like it's on the glass. What is
So,
that on the glass?
so this is, thank you for asking. This is the Valhil corporate logo. This is we definitively call this the Space Ninja, and it really the Space Ninja was the guy who got sent into the black hole of debt and is coming out the other side into the asset-backed world. So that's he's basically flying out at top speed, shot out like a freaking cannon, going like that. And he asked about the glass is the same thing.
Yeah, and the other right behind you on the wall there.
He asked about that. So
Yeah.
We want to
that
know about that too.
is Sail Me to the Moon, which was the piece that was performed and created at the Texas Blockchain Summit in connection with the first NFT offered in a securities compliant manner ever in history. So that is actually the Rolando Diaz is a Cuban American artist out of Dallas. He painted it live on stage in front of we had congressmen and state senators there and stuff. Warren Davidson was there. James Rule was there.
Yeah.
And then after he painted it, he signed it. We closed the offering like when he signed the thing. And he then picked up the mic and sang Fly Me to the Moon by Frank Sinatra.
That was awesome.
It was amazing. That was really cool.
I wish I had thought to cue that up, but that was a great thing. You guys can go out there and find it. I think it's at the blockchain Bitcoin Association on YouTube. Is that right? Where can we find that?
The organization that sponsored the Texas Blockchain Summit was the Texas Blockchain Council.
There you go.
So it may be under their stuff. Intoro, who is the broker dealer, Intoro is a boutique investment bank out of Houston, really cutting edge, leans into all this digital asset stuff, making markets and that. They were the broker dealer on the deal. They had two of their bankers were color commentary, like golf color commentary about the offering and everything while it was going on. It was really it was a spectacle, you know.
Well, you own a piece of history right there, and
That's right.
that right there is yeah, it's pretty incredible. But again, want to thank you because everybody had a great time, and thank everybody that had all the great questions. We couldn't get to them all, and all the super chats. Thank you for that as well. The support of On the Chain, and Jimmy, thank you for coming in here, answering the questions. Man, really enjoyed it, loved it, and I don't know how an hour and 12 minutes went by, but it went by quick. Jeff, any thoughts before we?
Thank you guys. Really appreciate it.
Yeah, it was awesome having you on. It was shout out to Crypto Investigator also last support in there. And my dog says thanks for coming on as well. That's why
he's barking in the background. Julius,
he had his questions. Julius is like, what's going on here? Got to get my 2 cents in as well. But we really appreciate you coming on. This was an outstanding conversation. We could have gone on for a couple more hours like this. So awesome to have you back on, and we can dig into some other of these topics.
Yeah, so we'll let you close it out, Jimmy. Any last closing parting words or something we didn't mention that you wanted to talk about, or?
I don't think so. Hodl and call your Congress people, you know.
Keep plowing it home, and thank God for John Deaton, who has created a giant thorn in the SEC side. So thank you very much, Jimmy. Hang out here in the green room here as we go off live there. But from Chip, Jimmy, and Jeff, we are out of here, guys. We'll see you on the next one. Take care.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.